Okay, welcome everyone to our webinar this morning. We will be talking about a trading strategy that I have personally found to be very profitable. It's quite easy to identify and usually results in very nice moves. And it's called the Pinbar trading strategies. So let's get started. So in this webinar today, we'll learn about what are pin bars, how do we identify the pin bars, and then I will share my strategy of actually profiting from pin bars here. Not market inefficiencies. We'll also look at where to enter the trade, where are you going to place your stop loss, and how do you look for your exits in this type of strategy. Okay, first of all, defining a pin bar. What exactly is a pin bar? So pin bar is a single candlestick reversal pattern. I normally talk a lot about reversal patterns. So this one is the easiest one to identify because all we're looking for is only one candlestick. It also represents a sharp reversal or rejection of price, and it implies that the price will continue in the opposite direction of the tail. So when we see a pin bar form, usually there'd be a long tail and there'll be a short body. And this goes for both bullish and bearish pin bars. So let's take a look at what it actually looks like. So this is an example of a pin bar, or two examples of pin bar. This one here, so this is the body. So we have open and close, and the body is really small compared to the wick or the tail, in this case of the candlestick. So when something looks like this, we call this a pin bar. And the long tail generally implies that there's this rejection of price. So at one point in this case, the sellers were pushing the price down. This candlestick would have been a red candlestick, very strong red candlestick. And generally, we see this form at strong support and resistance areas. And you'll notice that breakout traders would generally take this trade in the short. They will actually enter a short here, but this is not a short entry. So you're waiting for the candle to close so that we understand what the body looks like. So if it's a small body and a long tail, that's called a pin bar. And in this case here as well, this is a bearish pin bar, a long tail and a short body. And generally the tail will be 3 times the size of the body. So bullish pin bar, this one is a bullish pin bar. The body is the open and the close are right here. So in case of the bullish pin bar, the closing price will be higher than the open price, and there will be a long tail to the downside. So this means the sellers were at one point pushing the price down, but then the buyers came in and pushed the price up. And as a result, the candle actually closed as a green candle or a white candle. That means it's a bullish candle. So the buyers were stronger than the sellers were in this case. And so it closed in a positive territory. So the close was higher than the open. And there's a long tail in the bottom. So in case of a bearish pin bar, it's the opposite. So you have a small body at the bottom of the candlestick and a long tail to the top. And like I said before, the tail will be about 2 to 3 times the size of the body itself. And in case of a bearish pin bar, the open price and the close price is at below the open price, and there's a long tail towards the top. And this would suggest that the price would move down from this point on. So how do you actually take entries for pin bars? So there are 2 different type of entries that you can take. So in case of a bullish pin bar here, we are looking to go long at this point because the price closed higher than the open and there's a tail towards the bottom. So in this case, you can wait for this candlestick to close and you're looking to place a market order at the very top. So once the price closes, you enter long and then you're looking for price to go up. Another thing, which is a slightly better entry, and you get a few more pips, is you wait for price to retrace about 50% of this candle, and you place a limit order here, and you're looking for price to go up. So it's still going up, but you're waiting for a pullback first, and then you are looking to go in the direction of the candle. So this would be a deeper entry here, so you get extra pips in this trade. But there's nothing wrong with, let's say you didn't want to place a limit order, you just wanted to go with the market order, you can place it at the top here, and we are still looking for a move to the upside in terms for this bullish pin bar. And in case of the bearish pin bar here, our entry, we are looking, first of all, to enter a short position. So we would enter either at the close of this pin bar. So once this candlestick closes, we can just enter a market and order here to go short. Or another option, again, is you can wait for pullback, 50% retracement of this pin bar, and then you're looking to go short. So either way, you're looking to go short for a bearish pin bar. So let's take a look at an example here. In this case, I have Euro US dollar 1 hour chart. So we see a pin bar right here, very nice pin bar at an important level. So you could enter right at the close of this pin bar. See, in this case, it did not pull back 50%. And that can happen, especially if the price has been rejecting several times. It may actually not pull back 50%, but usually there is some pullback, even if it's just a 10% or a 20% pullback. Normally you'll see there will be some pullback that will actually, that gives you a better entry. But so you're looking for a bit of a pullback, and then you enter the trade, and you exit the trade once you see a bullish reversal pattern. So once we get, for example, this engulfing candle here, this bullish engulfing candle, a green candle, this would suggest that price is wanting to move in the opposite direction now. So it would either pull back, like in this case, or it could just continue upwards. So at this point, our trade is done once we see that the price is wanting to move in the opposite direction. So in this case, from entry to exit here, we were looking for at 96 pips or $960 in profit if you're trading with one standard lot. So very nice. And your stop loss would go above the top of the pin here. Make sure you give a few pips above the pin so you allow your trade to have some breathing room, because sometimes what you could have is your price could come back to the top of the pin, and it may come back and test that level one more time before it drops. So we want to make sure that we don't get stopped out by having too tight a stop. We want to give it some breathing room. All right, so let's take a little more in-depth look at what our entry criteria would be for this kind of a trade. What are we looking for? So I am looking for a time frame, a higher time frame. The pin bars I find are more successful in the longer time frames. You are looking for either a 60-minute time frame or a higher, so 4-hour, 60-minute daily time frames. These work really well. We identify our support and resistance levels, so make sure you draw your support and resistance levels. When you're looking for these pin bars to be set up at big support and resistance level, major support and resistance levels, you'll find a higher success rate with this. So if you're trying to trade a 5-minute time frame, you will still see the pin bars work out. However, the number of pips that you would get from a 5-minute time frame, for example, will be a lot smaller than a 60-minute time frame. So when the price gets rejected on a 60-minute or a higher time frame, usually the move will be much bigger in the opposite direction than it would be on a smaller time frame. So keep that in mind. And again, we are looking for price to form a pin bar. So we are looking for a long tail and a small body, which would suggest that the price is actually getting rejected. So there will be some traders the breakout traders, who would think that that level is getting broken, and they would not wait for confirmation, and they would enter that trade in the wrong direction. We don't want to be one of those. So we wait for the candlestick to close, and if there's a big rejection tail on it, we look to trade in the opposite direction. So you can either take an order on pullback, like we talked about, 50% retracement of the candle, or you can enter right when the pin bar closes. So it's up to you how you want to place the order. And your stop loss would be above or below the pin bar. So in case of a bullish pin bar, you're putting your order below the tail in the bottom because you're looking to go long. And in terms of a bearish pin bar, your stop would be above the tail because you're looking to go short. And if you have confluence, so let's say there's important support and resistance level, and there is the 0 level, 50 level, 20 or 80 levels, those are important levels. Any kind of confluence makes it a higher probability trade. So if you, let's say, if you're trading, I trade pivot points. If this sets up at a pivot point and important support and resistance level, it just gives it a higher probability of the trade working out in your direction, in your favor. So let's take a look at some more examples here. We had looked at Euro US dollar 1 hour chart. In this case here, we are looking at New Zealand US dollar 1 hour chart. So we have, I have marked my support and resistance levels here. I see a pin bar. This is a nice pin bar. We actually see 2 pin bars. And if you see things like this, so you have one tail, big long wick to the top side, and then the price actually closes in the red. So red candle here, pin bar on, sorry, a tail on top, nice pin bar close, and then another pin bar close. This suggests that the price is not willing to move above this level. So this is a nice, very nice setup. So 3 times the price essentially tried to break through this level, because at one point the candle would have been green. So 3 times the price tried to test this level and it failed. So this is a nice, nice entry here. So after this, the first pin bar closes, you can look for a 50% retracement. And in this case, we did get the 50% retracement, and you would take an entry short. So you're selling this at this point. And then you look for price to basically come down, and your stop loss again needs to be above the tail of the pin. Make sure we are giving it enough room to breathe, because it could again come and test this level one more time. So stop loss goes here, and then we look for the next level that we think the price will trade to, and this is our next support and resistance level right here. And as you can see, price tries to break through, but then comes back and closes in a very, very strong bullish engulfing candle here. This would suggest that we could have a pullback in the opposite direction. So once you get a strong bullish reversal pattern here, engulfing candle, or any kind of bullish, strong bullish candle, we would like to exit the trade at this point. And from entry to exit here, we have about 89 pips in the trade, or $890 if you were trading one standard lot. So again, a very nice trade. If you're looking for on a higher time frame, this is where you get these nice entries that we can take on for nice profits. And here's another New Zealand US dollar 1 hour chart here. We have, this is a bullish pin bar. We looked at a few examples of bearish pin bars. This one here is a bullish pin bar. We're looking for price to go up. And if you look at the patterns here, the 3 candles here form a morning star pattern, which would also suggest a move to the upside. But just by looking at this candlestick alone, we have a long tail to the bottom. We have a very, very small body. It's a doji here, and we're looking for price to move to the upside. So you could wait for a 50% retracement here for a pullback to enter long here, looking for the price to move up. And once you see a big pin bar on the other side, it's usually time to get out, especially when there's a long body here, big rejection. We are expecting the price to come down after that. So you're looking for any kind of a reversal pattern to come out of the trade. So this here, rejection, this shows a big rejection. And as you can see, the price did move down after that. So we would get out after this big rejection. So again, this is a 1 hour chart. I find pin bars work really well on the 1 hour chart. And in this case, from entry to exit here, we had about 102 pips, or $1,020 in profit if you were trading with one single lot. So this is another nice example here of a bullish pin bar. And actually, yeah, this is the one that we had looked at before. So any questions so far? Okay, so this is making sense. All right, so we're looking at, this is US dollar CAD, a 1 hour chart again. And as you can see here, we see a nice bearish pin bar. So there's a red candle, rejection to the long tail, rejection to the upside. Yeah, you can trade from a 4 hour and daily time frames as well. It works just as well. Again, the higher time frame that you get the pin bar on, the better the trade, because you are looking for a much bigger drop if you have the higher time frame. I like to trade them from a 1 hour chart, but 4 hour chart, and especially if you see it on a daily chart, those are really good time frames to trade. Yeah, absolutely. The move will be bigger on the bigger time frames. So here we have, again, yeah, so again, we have a pin bar here. And if we take a look at, again, so we would draw our support and resistance line. Looks like my support and my resistance line is missing here. So a question that came in was, what do you do about the long pin bars that are created by the news? Yes, I tend to leave the news alone. I don't really like the big news pin bars. So there was one actually. There was one on the 5 minute chart. So let me take a look at it. There was one recently. What news had come out? It was a New Zealand dollar. Yes, they did not cut interest rate. Let me check. When was that? It was a big pin bar a few days ago. It may have been, no, that was the gap here. May have been over here. And on a 5 minute chart, it was, sorry, I'm trying to find it here. That was, there was a big pin bar and a rejection in the bottom. Okay, I can't seem to find it. But yeah, if it's news, I don't like trading news with it. Oh, I'm looking at Aussie, sorry. New Zealand dollar was where April 27. Thank you. So here we go. Let me take a look. Yeah, it doesn't look right. I can't remember the exact picture that I was looking at. Yeah, so this is where the news had come out at 5 p.m. Where they actually did not cut. They were everybody was expecting, the market was expecting them to cut interest rates, and they didn't. So with that, we had everything else had followed, and there was a drop. So April 27. So let me take a look at here, for example. Here is a good example. So this was April 27th when the New Zealand dollar, or we had the news coming out. So we have big pin bars on both sides. I tend to ignore those because especially when there's news, there can be volatility in the market. So this wasn't the New Zealand dollar news, but this was news that some news that had come out, but we saw price move in both directions. I tend to just stay out and wait for price to settle down before I actually take a trade. So in this type of scenario, I would just leave it, because where do you trade? Goes up, goes down, and goes everywhere. So that's not the best time to trade. All right, so let's go back. A dollar yen, there was one. Let's take a look. Let me get rid of my indicator here. Yeah, there was a big drop here as well. Oh, because yeah, they didn't. Market was again expecting them to do monetary policy change, but they did not cut their interest rates. That's what the market was expecting. So there was a big drop. So this one again is news related, but it's a nice drop. There isn't a big pin bar in this one, but the one that we looked at, the Euro US dollar, that was one of the examples where you get huge pin bars with the news and you just ignore those. So here, this was again the US dollar CAD, and as you can see, 348 pips in this trade from entry to exit. And in this case, this was actually, I think, was created by the news. The move was created by the news, but the pin bar was a few hours before the news happened. So here, the news just helped our trade kind of work out in the direction that it was supposed to be. So again, you would put your stop loss up there above the high of the tail here, and you're looking for entry short. And in this case, news helped. And as you can see, it dropped 348 pips. So nice big trade. And here again, you're looking for price to show you signs of reversals. So here, as you can see, multiple times the price tries to go lower here. So there's a pin here, and we see price trying to go lower, but it's not able to. So it kind of hits a wall here. So this is usually a good indication that it's not going to go lower. So once you start seeing these bullish candles, strong bullish candles, time to exit the trade. Again, a very nice trade, 348 pips. So those are some of the examples I have. Any other questions about the pin bar strategy? Would you guys like to see some more examples? We can go on the charts to look at more examples. So the question here is, when you are stopped out by a pin bar, does that mean you're just too early? And does it confirm the direction that we should consider getting back into the trade? So what happens is sometimes the price will go and test the top of this pin bar. That's why I say put your stop loss above. But sometimes what happens is it may not. Right? Like if you get these pin bars before, let's say, the Asian opens, they are pretty much useless because the market is not pulling back. It's just kind of consolidating. So anything before, let's say, 7 p.m. Eastern, before the Asian open, if you just see consolidation in that type of time frame where the market is just going sideways, then it may not be as important because it will come down and then just go up again. So let's say we have had a one directional move and the price doesn't pull back more than 23%. That usually means that the price will go in the opposite direction, and that's when we want to make sure that we don't get caught in that. But if the pin bar does go, let's say, stop you out, I would wait to see what it does, because sometimes what it does is it may do a higher test and give us another pin bar. So you may get two pin bars that look like this. So you have a pin bar and then another pin bar that goes higher and closes down again. So if it closes down again to give you another pin bar, so that becomes a tweezer top pattern then, and you can still take that and trade that. In this case, for example, you could still trade it short, and you can look for another entry short. But if it closes off with a bullish engulfing candle or any kind of bullish candle that closes very close to the high of the pin bar, I would just wait. I would just wait and see if it gives us some sort of a reversal, or it may be a sign that the buyers have come into the market and they want to take the price up higher again. Yeah, usually it's good to wait and wait for it to close. And yeah, so another point is make sure you wait for the pin bar to close, because sometimes what happens is we'd be sitting there watching the charts and it'd be 2 minutes to the close or something like that, and the price could just completely come and close in the opposite direction. So you're looking, so let's say there's 10 minutes to a 1 hour candle close, or it's 5 minutes or 2 minutes to a candle close, and the price just, it looks like it's going to close as a pin bar, but wait for it to actually close as opposed to jumping in too early, because I have seen times where it looks like it wants to close to the downside or to the upside, and then it comes and does something completely opposite of that. So make sure you do wait for the pin bar to close, the candlestick to close, before taking the trade. So another question is, if I watch for the pin bar on the 4 hour time frame but place my entry on the 1 hour, will it give me a smaller stop? Is that a good idea? So if the pin bar is on a 4 hour time frame, I would wait for it to pull back a bit, yes, and I would look for an entry on a 1 hour time frame, because it would give you a better stop. Because then if you're putting your stop above the 4 hour level, then it will be way higher than it would be on a 1 hour time frame. And that's kind of why I like the 1 hour time frame, because it's good enough time frame that it shows that the price has been trying to do it. Price has been pushing in one direction and then rejects it on a good level or a good amount of time. The 4 hour, I actually really like trading the daily pin bars. And what I do in that case is I would wait I would wait for a pullback. I always wait for a pullback on a daily chart, and so that you have a better entry and a tighter stop loss. And then I would normally trade it on a 1 hour or even 15-minute time frame. But it gives you that, just having that pin bar on a daily will actually gives you a very, very nice entry. So actually, let's go take a look at maybe a daily chart to see if we can find a pin bar. So another question is, what do you do with the succession of pin bars if you have one bearish pin bar and two bullish pin bar? I would not take that trade. I would just, if there is one bearish and two bullish pin bars or something like that, it just means the market doesn't have a direction in mind. And I would just stay out of that trade, because it doesn't, like for example, this is a big pin to the upside, and then you get another one like this. Even if you took a trade and the next one is like this, I would just get out of it, because this is not a good, it doesn't suggest that it's going to go anywhere. What I do like is this here, for example. So you have pin bar, so, or you have a nice tail, again, rejection. See how the price just seems to be hitting a wall here, and you have your pivots. This is your R1 level. This here for 1, 2, 3, 4, 5 hours, price tried to break this level and did not break this level. So this would suggest that the price would move down. And in this case, your stop would go up here. And even if you place your trade here, so it's about 47 pips, so about 33 pips or something like that, you'd be able to get out once you get this green candle. It's time to get out. This I like. This type of thing I don't like so much. So I wouldn't want to trade that. This is good. So this is a reversal, but it's a different reversal pattern. So you can still trade that. So on a daily, so I was going to go to the daily chart. I really like, so here we go. This is a good example. So you have twice the price got rejected, and then you get a green close on this candle here. This one is not a green close, so this one would not suggest that the price was going to move up. It does show rejection, but I like this one because the open and the close was slightly higher than the open here. I like that gives you tweezer bottom pattern. So this would suggest that the price would move up. So after this pattern, these two pin bars here, you can actually trade it to the upside. And this is the daily chart. So looking at the pips here, just with one candle, you have 100 pips, and the price continues on till you get this one here. That's not a very solid close. So about 156 pips in this trade. So nice trade. This is daily chart, so it works out on the daily chart here as well. This is another one, but you could have gotten stopped out on this because it does go slightly lower, and then of course pushes up quite nicely. Here's another bearish one. I do like this one here. See how price is having, so we see a reversal pattern here, railroad reversal, and then price is having trouble breaking this level. So 1, 2, 3, 4 times it went and tested this level, gives us a pin bar, and as you can see, a nice drop in that case. So if you see multiple pins like this, I like that. Just not the one in opposite directions. I like the one that confirm the direction that I'm thinking of taking the trade in. Let's see if we have any other daily pin bars here. This one here, but it did not come too much in our direction. So 156 pips, and I guess if you close on a daily chart, you ended up with just 30, because then you get this pin in the opposite direction. But in overall, if you were managing your trade with a lower time frame, you could capture at least about 80 pins or so here. So those are some of the examples. Okay, I was trying to find a bullish one, but euro on a daily chart here. This one here, but it's the body's quite big here. This one would work. Okay, that was the Euro chart. Any other questions about these pin bars? It's a very simple strategy. You're just looking for, all you're looking for is a pin, really. So this is another pin bar here. I do like this trade, but as you can see, it hits a resistance level or a support level here and then turns around. And as you can see, this is your support and resistance line, and that can happen as well. It will work out after the pin bar closes. So if you enter the trade here, it's about 82 pips, but as you can see, it's not able to break this candle lower, and the next day the price goes up. I'm not sure I understand the question. I'm seeing where this strategy can be emulated with all decision candles. Not sure I understand exactly what you're saying, SB. But it is a very simple strategy because all you're looking for is a few different criteria here. The first one is a key support and resistance level. So mark your support and resistance level, and if you see a pin bar set up, and then second thing criteria you're looking for is a pin bar. So in going back to our chart here, so first criteria is a strong support and resistance, and then you're looking for a 60-minute or a higher time frame, so longer term time frame, and you're looking for a pin bar to basically form at that level. So once the pin bar is formed, you take a trade in the opposite direction of the tail. So wherever your tail is pointing, if the tail is to the upside, you're looking for an entry short, so you're looking to sell, and if the tail is in the bottom, you're looking for a long entry. And a good kind of something to keep in mind is you're looking for the next support and resistance areas, and that's usually when you'll see your bullish engulfing candles and stuff like that. So you'll see your reversal patterns will generally tend to set up at that strong support and resistance areas. So look for that. Decision candles such as engulfing bear. Yeah, so a lot of times you will see after the pin bar, you will see engulfing candles. So you'll see a morning or evening star. Yes, you can use the same type of criteria. I look for confluence in pretty much all my trading strategies. So if there is a pin bar and it's an important support and resistance level, for example, let's say there's a pivot level there or some sort of Fibonacci level, those are all good places or good areas of confluence. And if you can find a trade at those levels, the probability of the trade working in your favor is a lot higher. It just makes it a good, very, very good trade. All right, so that's all I have for today. Are there any other questions before we wrap it up? It was a short seminar or a webinar, because the strategy is really, really simple, and it is a highly successful strategy as well. I find it works out very, very well. So if there are you're welcome. So if there are no other questions, if you would like to learn more trading strategies, some of the ones that I use, you're welcome to check out my course. It's at tradingwithvenus.com/course. And right now I am offering, it's only for $297. So I'm offering a discounted price for this for $297. You're welcome to go check it out. If you have any questions. Aussie and pound right now, currently. Let's take a look. Aussie pound here. That's a big drop on the pound. Oh, that's not a good chart to be looking at. Let's take a look at Aussie right now. I would give it time to, so this here was really nice pin bar right on R1. A very, very, very nice pin bar, looking for a move to the downside here. Currently, just the way I was watching it close, the market close on Friday, I think I would give it some time to open on Sunday here today, and see what direction it trades in. I would not take this trade just yet, just because the closing times are not the best. Usually the market may gap up and open, but this right now, it does look like a pin bar, but I like this pin bar better, just because it's at an important level and it's not at the close. So right now, if you look at this close, for example, excuse all the indicators here, but this one here, it is a bearish candle. However, it's on the close, so I prefer not to trade the closes. I prefer to trade a candle like this one when it's in the middle of the session or the beginning of the session, as opposed to the close of the session. So I would wait and before we trade it, because chances are it will pull up higher and then give you a pin bar. And if it does, like this, for example, especially at R1, that's a good trade to take. And in this case, we could have had, I didn't actually use this one, but we could have had, it's only 17 pins up until here. Yeah, that was not a big move, but overall it was a nice move, but you would be getting out here. So it looks a little choppy, but the pin bar is good. I use a pivot point indicator. I use pivot points well, I use pivot points every day in my trading. You can just download, I think most brokers have, I know Oanda does, and you can actually just do a search for the pivot points indicator, and it will, or you can send me an email, raman@tradingwithvenus.com. I can send you the pivot point indicator. All right, so that's all I have for today. So we will call it a wrap now. It's a very simple trading strategy. Again, if you wanted to learn more, you are welcome to check out my course. Okay, you guys have a great rest of the weekend. So I will see you on the next webinar.